We hate agencies. An agency is one of the most stressful businesses in the world because, if you look at a software business or a magazine or anything like predictable that has subscribers, they just go like this, right? If you look at the revenue numbers, usually they go, and if they go down, they go like this, right? They just slowly go down. And an agency looks like this.
Yeah.
They're very unpredictable. I don't like that. I don't like that you can be killing it and then a month later you lose that contract and the pipeline slows down and stuff. Do I love the business that I started for nothing that now does over $50 million, let's say, of revenue? Like, it's a big business. Yeah, I love that. But do I think that I can easily go out and start 5 more Metalabs? No.
I've been following Andrew Wilkinson for the past 10 years, and he's probably one of, if not the most influential entrepreneur in my whole journey. So after exchanging a couple of emails about audio quality on one of his videos, my business partner Luca told me, "Look, why you don't invite him over on the podcast?" I thought he would never accept, but turns out 3 weeks later I was on a plane flying to Canada, British Columbia, and I was ready to interview him. As usual, the sponsor of this episode is Belka, my own company. We're specialized in design systems, so the intersection between design and development, the collaboration, the processes, the tools, the Figma, the storybook, and how to make a product look better, but also how to make the team work better together. We've been working for the most influential and top dogs in the tech scene in Italy, and if you want to learn more, the website is in English. You can find more information down below in the description of the video. With further ado, let's discover Cosa Sposta, which means what does move the needle, what does have an impact, is loosely translated like that, for Andrew Wilkinson. I am Giulio, and I'm glad you're here listening to this episode.
Shall we start?
Let's do it.
Fantastic. So thanks for being on this episode, Andrew. I've been following you for years at this point, reading Medium blog posts, and then your newsletter, following Metalab. And so thank you very much for having me.
Of course, great to be here.
So one question I know always ask is how big is your company today? Like revenue side, how many people are working in the group? I'm talking about tiny now. How long have you been an entrepreneur now?
Man, I've been an entrepreneur for about 20 years. About 20 years ago, I was working as a barista, and these guys walked into the coffee shop, and they would sit on their laptops working all day. And I walked over to them, and I was like, "Don't you guys have jobs?" And they said, "Well, we're web designers." And they explained that they would go into small businesses, and they would say, "Do you have a website?" If they said no, they'd charge them $500 and make a website. And that seemed like magic to me. And so I just didn't want to be a barista making $6 an hour. I wanted to be the guy drinking the espresso, not making the espresso. And that's how I started. And I never thought I'd end up here. Today we own about 40 or so businesses. I also have some other businesses that I own outside of Tiny in my family office. We own everything from a newspaper to a medevac business to a social network to software companies, agencies, Aeropress coffee maker company.
Big fan.
Yeah, I would hope so. Yeah. It's being an Italian, we need to make sure that we get your approval. And I mean, I would just say between all the things across everything, around 300 million, employees probably, I don't know the exact number right now. I think it's 600 to 800, somewhere in there.
From your book, you described once as a miserable millionaire at some point. So what were you chasing that then it revealed to be just a mirage?
When I was a kid, my parents were really struggling financially. My dad was an architect, and his architecture firm was always 2 weeks away from going bankrupt. He was constantly taking out credit lines and trying to make payroll and really having a hard go of it. And so, when I was a kid, money was a 4-letter word. It was very tense in our house. My parents would fight about it quite a bit. And in contrast, I went to school in one of the wealthiest public schools in Vancouver. And so I was going to school with all these very wealthy kids, and they were living it up. They lived in beautiful homes, and they would go to Hawaii for Christmas, and their parents drove new cars, whereas my parents drove, a rusty old Volvo that was 15 years old. And so for me, that contrast really spurred me. I felt it's ridiculous because I grew up comfortable. Like we always were fine. We had food. There's no Charles Dickens story here.
You have the contrast.
Yeah, there's a contrast. And I think um you feel as wealthy as your five best friends, right? When you compare yourself to your five best friends or the houses on the block you live on. And so I felt very hard done by. And then my parents, because they would fight about money and money was so tense, I just wanted everything to be okay. So my solution to that is make a lot of money. Because if I make a lot of money, then everyone will stop fighting and everyone will be happy.
And at some point, regarding this, I think you referred that you were seeking leverage a lot. And now I feel, at least from what I read on the book, that you kind of looking for longevity, for kind of like a stability feeling.
Mm.
So how your enough definition changed and matured from the book today?
I think everybody I talk to, no matter what scale they're at, always says, I'll have enough when I have double what I have right now. So you ask someone who's making 100 grand a year, they want to make 200 grand a year.
So true.
You ask someone who's got 10 million, they think if they just have 20 million. And so, and I've met, billionaires who still feel like they need more. Um, so for me, what I noticed is that, I too was on that treadmill where I just, no matter what, I mean, even now after writing the book, the other day I was stressing about some money problem. And I remember I was sitting, had this really crazy busy day yesterday actually, where I flew to Vancouver and I did an interview and it was just really stressful. And I'd woken up at 3:30 in the morning for no reason. So it's just really down. And
I'm
I,
sorry.
it was, crappy day. I feel great today. Um, but anyway, so I get back and I'm sitting in my sauna at home, just trying to like regenerate before the kids get home. And I was looping on this thought of, oh, I gotta solve this problem. Otherwise, this thing's gonna happen in the future. And this business needs, I gotta do this or whatever. And I stopped myself and I was like, oh my God, I remember I felt this exact same feeling a year ago. I
Hmm.
felt it 5 years ago. I felt it 10 years ago. I felt it 20 years ago. And if you'd gone back to myself 10 years ago and said, hey, 10 years ago, I'm running, maybe my businesses are doing $5 to $10 million of revenue. And you went back and said, well, now you're doing 300 million and you're doing dozens of millions of EBITDA and all this other stuff. I would be like, oh, everything must be fine. I must be good. And the reality is that, you know, when you talk to people and they say, I need to travel. They always say, I need to travel to Europe. I don't know where people from Europe say this. They need to go to Bali or something.
Australia.
Discover themselves, right?
Yeah, we usually discover ourselves in India or Australia for
Oh,
Italy for some reason.
totally. And so everyone thinks they need to go somewhere else. And so
Uh,
I think the same is true with money and success. Like people think they need to go to this next level. But when they arrive, when you go to Bali, your brain comes with you, your anxiety comes with you, all your physiology comes with you. And so I don't think that that's a solution. And so for me, it's been much more about discovering some of my own issues and doing therapy. I did ketamine therapy, which was really, really helpful for me. And actually medicating myself. Like I started taking SSRI, like an anti-anxiety medication. Found out I had ADHD, which explains a lot because I have so many different businesses and I love starting stuff. And treating those has been actually more meaningful than almost anything else.
so in a way, knowing yourself was the ultimate hack to.
My girlfriend, she started tracking her period using a period tracker app. And the period tracker app sends you these warnings and says, today you might feel a little low energy.
Hmm.
Today you might feel a little irritable, right? Here's what's happening. Your hormones are changing or whatever. And she was like, oh my God, it's so accurate. And for so long, she had been building narratives. Oh, like, I feel bad because I'm stressed out because I got all these emails, or I feel bad because I'm dealing with this problem. But like, she's started to realize, like, oh my God, it's just that my body is pumping all these different chemicals through me, and that's making me feel a certain way.
Hmm.
So I think for me, the realization is more just, I can't modify my external world. I have to modify my internal world to actually feel better.
You went from building companies from scratch to buying them. Was there like a specific point when you realized I don't want to start new stuff from scratch?
Mm. I think, my first business was a digital agency called Metalab.
Yeah.
And what we would do for a living was make other people's businesses. So someone would hire us to make an iOS app or a web app or whatever, and it'd be a startup. And I always wanted that for myself. And so as soon as I could, as soon as we were profitable, I started starting my own startups. And because I didn't know what I was doing, I'd start anything. I started a pizza restaurant. I started a cat furniture business. I started an online DJ school.
I remember the DJ.
Yeah.
Would
Oh, right on. That's what I have one. That's awesome. That's awesome. Well, now we own Serato, so that worked out well. Um, but so I started all these really bad businesses, and I got lucky with a couple of them working, but I found that for 5 to 7 years or so after starting Metalab, I was starting all these businesses and it was just so miserable, right? Starting a business and not having it work, which when you start businesses, 1 in 10 will work, or 2 in 10 if you're lucky. And so that's a lot of failure. That's a lot of firing people. That's a lot of hiring executives and going through failures and shutting down businesses and losing a lot of money. And I was doing it all with my own money.
Mm.
And so after 6 or so years of that, I had sold a business. Metalab was profitable, but I was basically just burning all my profits, putting them into these money losing businesses. And I remember I was on a hike with a friend and he's like, dude, you're miserable. Like, you should just sell one of your businesses and relax. And to me, it felt like somebody had said, why don't you sell your firstborn child for liquor money? Like, it was just crazy, unimaginable. I think all founders kind of feel that, right? It's like your baby. And eventually I wrapped my head around it and I decided, you know what? I would love to have security enough, right? And I'd love to be able to buy a house and buy a nice car and live it up a little bit. And so I ended up selling one of our businesses. And for the first time, I had this big chunk of cash in the bank, and MetaLab was profitable. And I realized I didn't want to run all these other businesses. And so I shut them all down. And I had this moment of reflection of just realizing, like, I can't keep doing the thing that's making me miserable and isn't working, which was starting a lot of businesses. And I was kind of resigned to the fact that I needed to go and learn investing. And to me, investing was something that guys in suits did. Like, I had no interest. It's for bankers and those kind of people.
Penguins.
But I was like, okay, I have money. I need to figure out what to do with it. And my dad had always had this book on his bookshelf called The Warren Buffett Way, which was the story of Warren Buffett and how he invests. And when I read about him, I was kind of shocked because most business people talk about how hard they work, and Warren Buffett didn't work hard. He did what he wanted, well, he worked hard, but he only did the things he loved. And the only thing he loved was reading and buying businesses, and very, very high level business. He wasn't getting involved in any of the day-to-day work. And so here he was, he's one of the wealthiest people on the planet, and he'd just lie around on his couch reading all day, talking on the phone. To me, that sounded pretty good as someone who'd been running businesses for 7 years. And so when I read that, me and my business partner, Chris, started rolling out similar strategies to what he does. And what he does is he hires CEOs to run all the businesses, which is something I had never realized I could do. I'd always felt guilty and felt like I had to run all the businesses myself. And as soon as we did that, we noticed the business had growing. And so we decided, let's go out, we'll buy wonderful businesses, we'll put in CEOs or leave the founders to run them, and we'll just copy Warren Buffett in the 21st century.
I'm curious about your thought about MATLAB as a compounding machine as opposed to a agency model that was kind of like burning you out. Do you think that MATLAB had a chance to become that compounding machine, or do you feel that it's reached its plateau and that's where it should be?
Well, I would say that it could be both. I can not enjoy running an agency, and it can be a compounding machine. I think the definition of a great compounding machine would be a business that can grow its profits every year, but then can take those profits and invest them in a way that grows the profits even more. That's
Yeah.
true compounding. The problem with an agency is there's nowhere to invest the profits. You can't really go out and buy ads. You don't really need a lot of money to hire people because when you hire people, you bill out their time. You don't need a fancy office. That's really stupid. Most agencies I find when they're profitable, they go buy a really fancy office. There's one that I know of where they had a basketball court in their office, or they spin up labs. So it's like they incubate businesses within, and that usually doesn't work. So I'd say Metalab, it's a tremendous business. If you look at our public filings, you can't quite parse what Metalab's doing, but it's a big business. And it's grown a lot consistently for 20 years.
Yeah, yeah.
So in that way, it's a compounder. Now, I don't enjoy running any business almost after about 15 employees, even 10 employees. That's kind of my comfort zone. And so I've hired a CEO and we've got a great management team there. Um, but yeah, I think you can have a compounder. You just can't reinvest the profits in digital services businesses.
Because it has like an organic growth and you can just buy more
It doesn't
growth.
need capital. Like when I talk to people and they're like, "Oh, I'm raising money for my agency."
Yeah, that's weird.
It's so weird, right? It's like go get your first client, hire people, and you're good, right?
But like,
Or when I hear about people and they're like running an unprofitable agency, and I'm like, how? Like your math is off. Like
yeah,
that just doesn't make sense.
yeah. It's usually people that cares too much about the work itself
Totally.
more than the company.
People are artists sometimes. Yeah.
Yeah, I think you tweeted like a couple of days ago about the e-myth.
Mhm.
Do you feel more a manager? Do you feel
Mm.
more an entrepreneur or an artist or a artisan? And that's something that I think that becomes more evident with agencies because they're usually this very good, skilled guy who starts something and he cares a lot about
Mm.
the quality of the craft. So
The
yeah.
the problem I think I remember, arguing with my brother about this because he would always say, "We should have just kept Metalab small." And, the problem that I always shared is like, how are we supposed to give people promotions? If you have a 5-person or a 10-person agency, that's great, but you can never really promote people. You can't really grow. If you can't grow your revenue in a digital services business without expanding the number of people there, pricing taps out at a certain point. And then what are you going to say to that 25-year-old who's working for you for 10 years? Hey, I'm really sorry, but we just can't give you a raise, so you can't buy a house.
Hmm.
I think there are examples like Pentagram where they stay really small and they do very high-end work, but there's only so many pentagrams out there where you can charge $1 million for a little simple logo.
Yeah. Yeah. It's a really hard trick to pull. So we're talking about delegating to CEOs. And a lot of founders I found that they kind of like glamorize delegating, but they don't actually doing. So what made you actually stand back?
I think one thing I've noticed about a lot of people is that they're control freaks. A lot of founders, they love taking on more than they can chew. I'm the opposite. I'm lazy. I don't like doing things I don't like doing. And the moment that somebody else will do it, I am so happy. And so I struggled a little bit in the beginning with certain things that I loved. Here's the thing is like, so everyone understands that like you should delegate like to a lawyer or to an accountant.
Right.
It would be insane to be doing your own law work, legal work, or accounting work if you don't know anything about it and you suck at it. But I think that's what a lot of founders do with most of the stuff in their business, where they're like still sending all the invoices. They're still doing all the sales, even though they hate sales. They're still programming, even though they're a bad programmer. And I think for me, the one piece that was hard to hand off was the stuff that I actually loved. So, for example, I love design. My happy place is like headphones, and back in the day, being in Photoshop, today in Figma. But ultimately, I realized that in order for the business to scale, I had to stop doing that. That was hard to say no to. Everything else, I was so happy to not have to do it. The moment that Mark stepped up, Mark was my like college roommate who took over a lot of the day-to-day business early on. Once he stepped up and was like, I'll be on the phone, I'll do sales, I'll fly to San Francisco, it was a huge weight off my shoulders. I was blissed out about that. And I've always been like that. I am so allergic to doing things I don't enjoy, probably because I have ADHD, that I'm just happy to delegate those things. I always say I want to be Teflon for tasks. I don't want to do anything that I'm not the highest and best person to do.
You don't sound lazy to me. You sound like that you kind of like keep it as much as you can. Like, yeah, I'm doing it. And then as soon as someone at least from your story, it tells you, look, I can take care of that. You're like, oh, finally.
I'm not, don't get me wrong, like, I'm not like, I am a lazy piece of crap. I'm like, I am lazy strategically. Anytime I'm doing something I don't enjoy, I just get this feeling of just like, oh, I can't, I don't want to do this.
Yeah.
Could be anything, could be simple, could be cleaning up clothes on the floor, whatever. I just hate doing anything I don't want to do. And so if you think about it, that's kind of a lazy person, right? If that was your roommate, you'd be like, oh man, this guy's super annoying.
Mm.
But when they're an entrepreneur and they win and their business gets bigger and they make more money as a result of delegating everything, then it's a really good quality. So in my personal life, it's a harder quality. In my business life, it's a good quality. So, yeah.
Specifically about delegating, what are the things that you look for when you are looking for leaders, or at the opposite, what traits makes you instantly very cautious?
Mm.
Mm, eh,
So when we hire, most of the hiring I do at this point is hiring CEOs to run businesses.
okay.
What I'm looking for, first and foremost, I want to feel energized. After I talk to a new CEO candidate, I want to feel good.
Hmm.
If my stomach is a bit off, if I've got a bit of a headache, if I don't, just, it could be a great conversation. But if afterwards I feel a bit off, my gut's telling me something, then that's a hard no.
Mhm.
Second to that, I also ask myself, would I let them babysit my kids?
Ha,
And if the
good.
answer is no, then it's like, immediately obvious, okay, I shouldn't work with this person. Past that, I'm looking for somebody who's already done the thing I need done. So, for example, when we hired the CEO of Aeropress, Gerard, who's the current CEO, he had already built a huge consumer packaged goods business
Mm. Which
for
was?
SodaStream. So
What?
he grew
Okay.
SodaStream in North America. It went from zero to
Perfect.
hundreds
Perfect.
of millions of dollars, and in many ways, there's similarities. And so I saw that and was like, okay, this guy knows how to do the thing we want. And then as I talked to him about what he would do with the business if we were to put him in charge, I was nodding along. And I find if I'm not nodding along with someone when they share how they're going to grow the business, I can say, actually, you're wrong. This is the right strategy. So let's say we're buying a software company,
Yeah.
and the CEO candidate I was talking to said, this is all going to be about enterprise sales, but I don't agree. It's actually all about marketing.
Mm.
Then that's going to be a misalignment because that CEO is just going to do enterprise sales. Doesn't matter what I say, doesn't matter how much I try and push them. They're an elephant, and I'm just riding the elephant. The elephant's going to go where it wants to go.
Yeah. Especially if you're giving the whole company keys to the
Totally.
guy. So
Yeah,
yeah.
totally.
Yeah. So we kind of feel like in the belly most of it. It's like,
Mhm.
hey, if does this feel right? And if it's that it fits, maybe it's a no.
Yeah.
It's very
Hell yeah or no.
yeah.
Mhm.
How many people do you talk to hire a CEO?
So we have a kind of a unique thing we do where we use a recruiter and the recruiter records the Zoom calls with people. And so what I used to do is I'd get on the phone with 6 different people and then see who I liked. What I realized is if I just have the recruiter record the Zoom video, I can just watch the Zoom video and I know immediately,
Hmm.
do I like this person or not? And if I don't like them, I just don't talk to them. And I would say really, if I'm gonna actually do CEO interviews, I'm probably talking to 3 or 4 people at most.
Yeah.
And I usually like to meet them in person if I can.
And but and this is the short list, I guess. But like the whole
Mhm.
funnel of things.
Oh, yeah, it's probably 20 or 30 people, but the recruiter is
Yeah.
I didn't used to like recruiters because I was like, "Why would I pay someone, $30,000 to go message a bunch of people on LinkedIn?" But now I've realized that it's worth having that broad swath of people, and recruiters can be useful if they'll do the initial interviews and then record the videos. I find that really helpful.
I read also that you struggle with accountability chart, that kind of structure, and also I've read that you're into EOS now. It's so what helped you move from like the 10 people unstructured chaos to okay, no, we need to make rules to our
Mm.
accountability chart to make things work.
So I would say, like, in the beginning, there was no vision, there was no structure. It was me doing everything. And then over time, I started delegating to different people, but I didn't really build a machine.
Mm.
And I think the breaking point for me was, um, when I realized there was no process in the business and that everything relied on me. Um, and around that time, I read The E-Myth by Michael Gerber, and in it, he tells the story of a woman who loves baking. And he says, the woman loves baking, and so she goes, "Oh, I'll start a bakery. That'll make me happy." So she starts a bakery, and cut to her, she's covered in flour. She's trying to, deal with angry customers and ring stuff into the cash register, and then she's running into the back to pull stuff out of the oven, and she's been up since 2 in the morning, and she's miserable. And I felt that way. I remember that idea was kind of shocking, the idea that your business could be a machine, that you don't have to actually be a part of the machine, that you're the engineer. You choose the right people, you incentivize them the right way, you give them process, and that the machine produces something at the end. And what I love about that mindset is that you can put whatever you want into the machine and something beautiful comes out the bottom. That is very appealing to me. I love that idea. And so,
Because you can pick the parts that you like most.
totally, I can do only, so for example, with Tiny, I talk to our CEOs, um, which I love, and I look at the numbers and I strategize, and then I go and talk about what I do publicly. And me talking about what we do in storytelling equals leads from people that want to sell us their business. And then that goes through the machine. And I play a little role in some of the approvals and the diligence and maybe talking to someone along the way.
Mm-hmm.
But I know that if I feed a great opportunity in the machine, that profit and a great acquisition will come at the bottom. So for me, it's just been about extrapolating that and scaling that over time.
But it feels again here that is a way for you to pick what you prefer out of the whole things that the world offer
Mhm.
and engineer a way to make that work like a real job, something that you can actually do day to day
Well, without feeling guilty about it, I think a lot of people,
because you feel that it's taken care of.
yeah, I mean,
Is
there's
it?
someone who loves doing what you hate. There's always somebody who loves doing what you hate. Even sweeping, like there's certain types of people that like cleaning. There's people that like programming. There's people that like doing law. But I've realized like there's always somebody that would be so excited to do the
Mhm.
job that you hate. And so giving that person an opportunity
Yeah.
is a wonderful thing if you can find them.
Let's zoom out a little bit and talk about your mental models, the way that you see the world. So I know that you're a bigger fan of the inversion concept from Munger. It's really what I found is that it's a really easy way to discuss about things. It's a simple concept, but it's really hard to grasp in practice. So, do you have a moment where inversion really helped you? Like you dodged a big mistake or you solved something through inversion?
Mm. I don't know that I have an example in the business world, actually. It's kind of in the business world. So, yeah, the idea behind inversion is Charlie Munger says it's much easier to think about what you hate or what could go wrong than what could go right or what would make you happy.
Hmm.
So, for example, the earlier example, you could imagine that if you moved to Australia, everything would be great, but that's a guess. Or if you had a Ferrari, then you would be happy. What you know for a fact is that you hate certain things. So maybe you hate having a day where you have to fly somewhere, or you hate having a day that's back to back meetings,
Mm.
or you hate when you can't see your friends, or whatever it is. And so when I read about that concept, Chris and I started doing this annual process we call anti goals. And so we basically made a list of what are all the things we hate in our day-to-day lives and how can we avoid those things. And so for us, it was being away from our kids for more than a night, having to travel for meetings, being on Zoom calls all day, having a packed calendar. There's just, a variety of these things that we just realized we don't enjoy doing.
Mm-hmm.
And I found that incredibly helpful. Now, we do that kind of annually, but me and my girlfriend actually do inversions every day. So we have this ritual where we wake up and we go sit on our back patio and we have our coffee and we do inversions for how is the stress lucky? So, for example, I could look at my calendar and go, oh my God, I've got to do all these really frustrating meetings, or I woke up to a bunch of texts from problems in the businesses or whatever it is. Oh my God, the kids are so crazy.
A crazy Italian emailed me to
Yeah, exactly. He forced me to do a podcast. And so for example, the inversion would be, well, I'm so lucky that I have children,
Yeah.
and what a gift that is to have kids that are healthy and happy and that they're so, energetic. Another inversion would be, I'm so lucky to own all these wonderful businesses and have all these interesting problems to solve. Or I'm so lucky that so many people want to spend time with me, right, for the calendar. And so we do that every single day. And I find that is a very, very clarifying ritual that no matter what's going on, I always feel better after I do that.
Hmm. And can you share one of the annual inversion things that you had for this year or maybe those couple of years?
So I traveled to New York
Hmm.
for a meeting with somebody, and it's a full day, right? Get on the plane and fly there, and you feel like crap and didn't really sleep well, and then have a night in a hotel and, away from the kids. And I wake up and I look at my phone, and there's a text from his assistant, and it says, I'm really sorry, but he's sick and he can't make it to your meeting.
You're describing my nightmare for this episode.
Exactly, exactly, right? It's just like you've wasted your time.
Yeah.
And when I thought about it, I was like, why am I in New York? I easily could have just called this person, talked to them on the phone, done a Zoom. Why did I do this? And so a big inversion for me is I won't travel for a meeting. I'll travel for an event. I'll travel for something I want to do, or, I want to go eat somewhere, or, something exciting,
Yeah.
but I don't travel for meetings.
Speaking about mental models again, is there one principle, one model that once you believe like gospel, and today you're like, nah, that's not it.
There's a lot of investors that get into this kind of mindset of like true happiness is compounding,
Hmm.
right? And they talk about people in whispered voices that compound at 25% instead of 18% or 15% or 12%. And I remember I was having lunch with uh, a really interesting guy who's one of our investors, and we were talking about these people, and he goes, "These people have an accounting hobby. What could be more boring than that?" And I think that I'm very much in line with that. Like, I want to grow significantly and I want to outperform, but I don't want to be obsessed with percentages. I don't want to live my life according to percentages. I want to grow the businesses as fast as we can, as is logical. But I don't think a good life is compounding at 26%.
That's that would be something revealing for young Andrew. Then,
Totally.
yeah,
Well, I think
you were very goal
well, it's
oriented.
mimetic, right? I think, when you read, I got really into value investing. And the ultimate measure of value investing is your compound annual growth rate.
Yeah, right. That's it.
And so, you read about all these people and you hear, oh my God, Henry Singleton from Teledyne compounded at 28%, and this person compounded at this percent. And you start wanting that without understanding why. Because for me, enjoying my work and working with great people and owning businesses I love and knowing that everyone can continue to flourish, or is it, we compounded at 28%? I'd rather be going at 18% than 28% if it means a happier work life and better companies. So I don't know. It's not to say that I don't want to outperform. It's just, I don't want to think about that. I don't want to think about that percentage number. I think that's just a very perverted way to live your life.
You're hiring a lot of people. I don't say, I'm not sure if managing is the right word, but for sure you're following the work of a lot of people. So, what's the most effective way you found to roll out incentives?
So I would actually say I'm not managing a lot of people. I hit a wall probably 3 years ago
Hmm.
where we had I had, 15 or 20 people that were not direct reports, but close to direct reports in the holding company.
Mm-hmm.
And then on top of that, I had 30, 30 or so CEOs, and they all want to talk to me. When you're the CEO of the holding company and you've got the CEO of Aeropress, for example, and they want to raise or they want to restructure.
Yeah.
This is made up example, but they want to talk to you. They don't want to talk to your COO. They don't want to talk to your VP of human resources or whatever. And I found that I got so overwhelmed trying to keep that many people's comp packages and incentives and problems in my brain at one time that ultimately I realized I was not the person for that. Um, and we had this guy named Jordan who's running WeCommerce, and where he was really strong was holding the bar for people and having all those conversations amongst a broad group of people. My nightmare day is being on the phone more than 2 or 3 times.
Mhm.
Jordan's day, his dream day, is talking to 30 different people on the phone. He just talks all day, and he's just a master of that. And so it became very obvious to Chris and I that we needed to elevate him and fire ourselves. We realized we're not the best people to be doing that job. And so we ended up joining the board, becoming chair and vice chair. And so now we are back in what I would call our zone of genius. We're doing the things that we are exceptionally good at, and we're not doing that piece. And so the way that we're thinking about incentives is very, very high level. We're thinking about how do we incentivize Jordan? How do we incentivize the key members of the team, that, people running M&A and that kind of stuff?
Mhm.
How do we inform the holding company team on how we should incentivize within, but we're not having to roll it out as much. Um, in terms of incentives, I mean, we've tried everything. We've tried giving equity. We've had people buy equity. We've given them loans to buy
Yeah.
equity. We've given options. We've given people funny bonuses, like we bought someone a Porsche once. We have tried cash bonuses. We've tried target based. We've done it all. And what we found is that certain things work with certain types of people, and it's very hard to predict exactly what's going to work.
Huh.
But the general formula that's worked best has been aligning the CEO with the thing that we want out of the business. And so if we want long-term equity appreciation and we're less concerned about short-term earnings and cash flow, so let's say this is a business that has to undergo some real transformation and requires some reinvestment, and it's really about what it'll be earning in 3 to 5 years, then it makes sense to do equity or some kind of long-term plan. Other CEOs, it's we bought a business, it's already the way it needs to be, it just needs to slowly grow. Those are businesses where we'll literally just structure a deal where every time we get a dividend, you get a percentage, or every dividend over a certain amount, you're going to get a cut of that.
Mhm.
And those are very clear, we make money, you make money.
Yeah.
I find that works really well. And I find that ensuring that the targets are reasonable and they hit them immediately is very helpful, because when someone starts getting a check for $20,000, $30,000, $40,000 a month, they very quickly start paying attention to the numbers.
I can see that. So it depends both, you said, on the longevity of the plan. So, for example, the equity price that you were talking about and the kind of person, but you didn't find a way to hack a way to understand what might be the right incentive aside from aligning the long-term goal to the company to the person. So, for example, the Porsche example, that was very funny. I remember seeing like we can buy you a car from tiny
Mhm.
website some time ago. Maybe it's still there.
Mhm.
Uh, so that part is still Jordan job, or is it just something that you gave up? You're like,
Depends on the person. So we would certainly talk about it, right? When
okay,
let's say there's an incentives problem, we would talk to Jordan about it. We talk to Jordan almost every single day. He would be the one to actually implement it, or someone from his team would implement it, but we're informing how we do it. I mean, what I try and do is I just talk to someone and I ask them about their life. So in the
mm,
Porsche example, we were talking to this guy, and he's an amazing guy who works for us, and he's made us a lot of money, and he's very well comped. But we said, what's your stretch goal? What's the thing, if you had a really big year, what would you do for yourself? And some people will say, oh, I just want to put it in stocks, or I want to buy a new house, or I want to have a cabin. And this guy goes, you know, I really want to buy a 911, but I don't know if my wife would let me. And so in the back of our heads, Chris and I remembered that. And we said, he had a really big year this year. Let's buy him a car. And because we bought him a car, his wife can't say no. And so he was super happy. He's like, he's still making a ton of money. He got this Porsche. And it cost us $3,000 a month or something. I don't remember what we financed it for, but to him, it was like giving him $40,000 a month because it was something that money couldn't buy.
Which is peace at home.
Exactly, exactly.
All right. And is there any like sexy sounding incentives on the other hand that it never works out?
Profit share.
Profit share.
Yeah. I
Yeah.
think profit share is really hard because, you can give everyone in your company profit share, but usually the checks are quite small. And I think if you say to someone,
Oh, you mean like whole company?
the whole company, like a lot of people love the idea, right? It's like, let's give everyone their fair share of the business. And they'll usually do something like, hey, we'll take 10% of the profits of the business and we'll distribute it to everyone.
Yeah.
What I've found is it's so diluted. If you have $1 million a year business that's making $500,000 of profit and you're distributing 10% of it, that's $50,000, and you distribute that across 10 or 20 people, the checks are not very big. And so it's just not enough to move the needle for people.
Yeah.
And then also they start doing the math and they say, okay, well, if it's only 10% and we're getting this and I get my $5,000, that means you get, $200,000. And to me, it just encourages issues. Whereas it's so much cleaner to say to somebody, you make 100 grand a year. If you want to make 150 grand a year or 200 grand a year, here's the simple way you can do that. And you make sure that it's something they control. So for example, you never say to a designer, hey, if we hit this profit target, you're going to make more money. Because the designer's like, what do I do? Do better designs? They don't move the needle on profit. They're there to do their job. And so I think with creative people, you want to pay them really fairly. You want to bonus them when they do an amazing job or they're working super hard on something or whatever. But it's very hard to come up with a bonus structure that's tied to a number because there's no number that comes out of creativity. So for me, it's like salespeople, CEOs, executives, people that control the costs in the P&L. There, it makes a lot of sense to give them a number-based reward.
Staying on the agency field, so at some point, I felt that agencies were Tiny's DNA.
Mm.
So the profitable, simple, sticky for cash flowing. Recently, I read that you exited some of those. I wonder if something changed.
We hate agencies. An agency is one of the most stressful businesses in the world because, if you look at a software business or a magazine or anything like predictable that has subscribers,
And there is a
There-
how to be rich quote here somewhere about
totally,
agencies.
100%. I mean, they just go like this, right? If you look at the revenue numbers, usually they go, and if they go down, they go like this, right? They just slowly go down. And an agency looks like this.
Yeah.
And hopefully the agency is going like this, so it's slowly going up over
Yeah.
time. But they're very unpredictable. I don't like that. I don't like that you can be killing it and then a month later you lose that contract and the pipeline slows down and stuff. Do I love the business that I started for nothing that now does, I don't know, over $50 million, let's say, of revenue? Like it's a big business. And it produces, tens of millions of dollars of cash flow. Yeah, I love that. I love owning that. That's a great business.
Yeah.
But do I think that I can easily go out and start 5 more Metalabs? No. We got lightning in a bottle. We've been doing it for 20 years. We have this amazing portfolio. There's a reputation, there's a team, there's a DNA. What we've had success with acquiring agencies is we basically bought a smaller agency that did similar work to Metalab. And we just said to Metalab, hey, you have all this excess deal flow, like companies that are like, they have a $25,000 budget.
Is the Z one?
Yeah, Z1. So Metalab couldn't do those projects and they would just say no to people.
Yeah.
So we started sending them to Z1 and we were able to grow Z1 like 10 times. So that was a very effective strategy for buying that agency. Every other agency deal that we've done has been a bad deal. And most of them, the ones that we sold at least, we made our money back and then some, and they were okay investments. But every time we've dabbled in buying agencies, it's generally been a bad decision.
It's really hard business model.
It's really hard.
Yeah.
Yeah.
I'm curious, this one is a question for a fellow follower from the podcast. He asked me about the evaluation of agencies. Like, what do you look for? What are the metrics that you obsess over? If you could share multipliers as well.
I don't know because I don't buy them really. I mean, we've bought we've done one larger agency acquisition. I think it was an error because somebody at Tiny had a strategy that they felt they could play out that was kind of similar to the Z1 strategy, right? If we put 1 plus 1 equals 5.
Yeah.
And that just wasn't the reality. And the business that we bought was worse than we expected in some ways. It's still a good business. But I think because of that, it didn't play out. And so um, I just find a great agency, if you wanted me to tell you what the best possible agency would be, it would probably be this, and you wouldn't want to work there, but it would be um, a digital services business that builds um, payroll software for the government and has a 10-year contract. And it's the only agency that knows how to fix the code. And so the government's completely reliant on it, and it's been doing it for 10 years, and it's probably going to have the contract for another 10 years. That is so depressing. I don't want to own that business. So boring. But in terms of a good cash flowing, valuable agency, it's all about predictability, right? Like when we're buying businesses, we're really just making the bet that this will exist in 5 or 10 years or 20 years. And how much can it make over the course of that time? And with an agency, you could come to me with an agency that's doing $5 million in profit this year. I don't know if it'll be even around in 5 years. I just can't predict that very easily.
I have another question that all of my listeners ask me specifically for, which is tiny stock.
Mhm.
So tiny stock value is down by, I would say, 80% or so. What's your read on that gap between the execution and what the market understand of what's just going on? And have you changed your playbook to adjust for that?
Warren Buffett has this great story. He talks about, if you own a farm and you have a really wonderful farm and you know that it generates $500,000 a year of profit. He says, just because some yokel comes up to your fence and starts saying, I'll buy your farm for 500 grand, that you have to listen to them, right? Those are just offers. And all that the stock market does is it shouts offers. Every single day there's bids and people decide to sell, and that moves around the stock price. The ultimate intrinsic value of the business, in my mind, is very different than where we trade today. And I think that there's a few pieces in our business that confuse people,
Hmm.
mostly that we don't do one thing. Most businesses in the stock market, they either do one thing or they're very good at saying, hey, we have a formula of doing XYZ.
Yeah.
And so, the public market loves software businesses like, if you came out and you said, we are a golf course management software company, we have $50 million of recurring revenue and we're growing at 20% a year. The public market loves that. All day, every day, they'll give you a huge valuation. When you come out and you've got 40 different businesses and you're doing social networks and software and you own a coffee maker company and there's all this complexity in it, they don't know what to make of that. And I don't think we quite recognized that you have to look like a duck and quack like a duck. And so I think part of it is a little bit of they call it the conglomerate discount of having a broad group of businesses and not really being valued fairly. The other piece is that we have all these businesses in a fund. So we have a $200 million private fund that sits beneath Tiny. And we've invested almost $40 million in it. And we own all these amazing businesses like Aeropress and Letterbox and a bunch of other ones in there. But none of those financials are reported in the public company numbers. All they see is we've put $40 million into it and it's a black box. And so there's some of these, I think sometimes like being a public company is so frustrating because you're just tearing your hair out going like, I just want to explain everything and show everyone what's going on, but there's all these legal rules of what you can disclose and how, and in order to disclose certain things, you have to get audits and, it's very frustrating. So we're really just learning how to be public and how to communicate with investors. And I think over time, the market will understand our value and get closer to what I would think intrinsic value would be. It's quite frustrating for me, like when I talk to people who are in the private market,
Mm-hmm.
I just talked to a guy who he's doing exactly what we do. He's only been doing it for 3 years. He's at about $60 million of revenue and making about $10 million of EBITDA. He's raising in the private market at over $500 million valuation. Tiny itself trades at $200 million Canadian.
Okay.
So I don't know how to, make sense of some of this stuff that I see, but it is frustrating for us.
Yeah, I feel that. Thanks for answering
Of
to
course.
this one. It was a hard question. So, speaking about the conglomerate thing, you own a lot of different companies. Um, well, a business that you were owning is one that you never want to sell. When is the other case? So when it's time to part ways with some business?
Yeah, I think I've learned this one the hard way in a few situations where, especially in the technology world, um, if you had went back and you'd told me 10 years ago that Google's moat would be gone
Hmm.
in, a few years, I wouldn't believe you. Even 2 years ago, I wouldn't believe you. But now with LLMs and ChatGPT, like I don't use Google anymore. I'm just on ChatGPT all day. And um, I think the challenge is really trying to evaluate those moats and predict when they're weakening. And then when you see them weakening, to be very decisive. So there's businesses that I've held that I've gone, oh, I never need to sell this. X and Y and Z will always be true. But then something shifts in the market or a new technology comes out or something disruptive happens. And so I think over time, we're just becoming more and more conservative about what a moat needs to look like. And that may even lead us to have to get into the physical world because the technology world is becoming so incredibly competitive with vibe coding and all this stuff that's happening in software.
Yeah.
Um, but yeah, it's the sort of thing where when you see your moat eroding, usually you're the first to know and you should act quickly, but very few people do. I think it's very difficult to have a CEO who's, there's a great quote by Upton Sinclair. He says, "Never expect a man to understand something that his paycheck depends on him not understanding."
Ah,
So, like,
it's a harsh one, but yeah,
people
I can
don't
see
like
that.
believing that, if you own a chain of photo developers before digital cameras came out and digital cameras come out, you dismiss it. You say it's a toy, the quality isn't good enough because you're making millions of dollars from your photo mats.
Right.
The logical thing is to say, this might be a toy now, but I can see that this is going to progress. I need to sell my photo mats immediately.
Is there any business that you had the opportunity to buy, but you didn't, that it still haunts you? Yeah.
hmm We almost bought meetup.com. We looked at it when WeWork
Oh,
was selling it, and
which is Italian now.
now it's Italian, but it was actually
Mamma
sold. It was sold to an American, and then they got resold to Benning Spoons.
Right.
And it was one of those things where it was March 2020. The world was completely shut down. Nobody was hanging out in person, and we were really nervous about buying this business that we were going, this could burn a lot of money for an unknown period of time. So for example, if it's illegal to go and hang out and meet up,
Yeah.
how long can we go? Let's say maybe it's a year, maybe it's 2 years. What does that look like? In retrospect, I think I probably should have recognized that the pandemic's not going to go on forever and it'll be a great business on the other end. And I don't know that, I think Benning Spoons bought it for 80 million or something like that. I don't know what that future looks like for that business with Facebook Marketplace and stuff. But I know that um, based on the price we were looking at it back then, it would have made a lot of sense.
You talked a lot about modes, about predicting how the world will be, the fact that, for example, software is very quick to change. I'm curious, like, how you feel about the concept of permanence, if you're still kind of like optimizing for that, or you made peace with impermanence and the fact that like everything is changing and I'm okay with that. Like, how do you feel about this?
Well, I don't think that there's such thing as permanence. I mean, if you read the history of Berkshire Hathaway, or even last night I was reading a book about Jimmy Pattison. He owns the
No.
best known business he owns is Guinness Book of World Records, and
Ah,
please believe it or not, but he is probably one of the, I think, the fifth wealthiest person in Canada. Runs a very big kind of $20 billion plus a year business, and I was reading his autobiography,
hmm.
and he's always been somebody that I look at and I go, oh, he's got permanence and he owns all these, traditional businesses and supermarkets and that sort of thing. But if you go back, you realize that even when he was in his 40s and 50s, he would buy these amazing businesses that did something very simple in the world. Like he owned a carpet or flooring manufacturer, and tariffs. There were tariffs and inflation and interest rates changed, and that became the world's worst business, and he had to sell it. And so it's a reminder that it doesn't matter how good a business model is, there's always some exogenous factor that can sweep your legs out. So for me, it's about continued diversification and then getting better and better over time at discerning what is a truly exceptional moat. And I think for us, like when we think about digital businesses, the moat that we see is we call them airport businesses because when you go to an airport, you have to, if you want to leave town, you got to go there. That's where there's two airports in town, three, but usually you got to go to a airport. People have to congregate there and wait for their planes. And when they're there hanging out, you can sell them stuff. You can sell them massages, you can sell them hot dogs, you can sell them magazines, whatever it is. And I think of communities and social networks on the internet like that. If you have a dominant social network in a space where it's the largest and there's a network effect, I think that's a sustainable competitive advantage over the long term. So we find those really, really interesting. But there's not that many businesses on the internet that have a real moat, you know?
Yeah.
Ultimately, like I think most software is like feature, not a product. Like Apple can do it or Google can do it or AI can build it.
Yeah, there's a term for when Apple makes you a feature. I don't know
Yeah,
what it is.
totally.
Yeah,
Well, the famous story is Steve Jobs met Drew Houston from Dropbox,
yeah.
and he was trying to convince Drew to sell to him and just build Dropbox in Apple. And Steve Jobs just said, "Your business is a feature, not a product." And it was true. I mean, if you think about it, Dropbox turned out to be an okay business. It's a multi-billion-dollar public company, but it is ultimately a feature now. And over time,
Yeah.
Google and Microsoft and Apple and Amazon are all slowly eating their lunch, and it's a harder and harder business.
So the theme of the podcast is Cosa Sposta. Cosa Sposta translates to what moves the needle,
Mm.
what has the most impact. So for you, what are the things that radically shift the outcomes? Like what are the things
Mm.
that move the outcome more than anything else?
The right people, um, a moat or a business model, so the right business,
Hmm.
um, and then incentives in business. Those are the three things that I think really, really move the needle. Like you can't miss any of those, right? So if you have the right people and a great business, but the wrong incentives, you won't do well. And if you have a great business and incentives, but you have the wrong people, it's not going to do well either. And if you have great people and incentives, but you chose the wrong business, doesn't matter what you do, that business won't do well.
That's a solid answer. So, and speaking about Andrew, then, what is the thing that you have that kind of sposta? So, what is the skill that you know that you are very asymmetric in what you do? That you bring a lot of value, you move things. What is that thing? What do you feel that is for you?
Well, I think one, it's I've done a lot of things. I have a lot of experiences. I have good and bad experiences with businesses, with operating businesses, with investing, with people. I've been through a lot. Like I look quite young. I'm 39, but I've been doing this already since I was basically 16. I started my first business really, which was like a online news site.
Right?
Yeah, at 16. So I've been managing people and managing businesses since then. And so that ultimately comes down to a filter, right? You can tell me a business idea, and I can tell you, or at least I can tell myself, hey, this will probably work, or it won't, or
You
it'll
can
be
poke
easy or
holes.
hard. I can poke holes. I have a good sense for that. Second to that, it's pace. So I think that my number one skill set is I move things forward immediately. So like, one story, me and my girlfriend went to New Zealand for a vacation or actually I was going to a conference, then we took a vacation and I was in Auckland and I was thinking like, who do I know in Auckland? And so I started going through LinkedIn and I realized that there was this guy named Matt Buchanan who I had met I think at South by Southwest or something in 2010 and we'd known each other from Tumblr. And I was like, "Oh, what's he up to?" And so I messaged him,
Like, come on.
and he ran an agency, and then he started this social network called Letterboxd, which was like a social network where you'd share the movies you're watching and you'd rate and review them. So all these film nerds used it. I've been a user and my brother had used it, but I wasn't really that aware of how big it was. And so we go for coffee and I'm asking him how things are going. And he starts saying these numbers like, Letterboxd has, at the time, it was like 8 million registered users. And I was like, whoa, that's like way bigger than I thought. And he started sharing the revenue and how it was monetized and stuff. And I said, what's the end game? Like, what are you going to do? And he goes, well, I'll probably sell it at some point. I don't know. I don't know if we're there yet. And I said, well, what do you think? Like, what's the number in your mind where you're like, oh yeah, like if I sell for that, I'm set for life or whatever. And so he says this number and I just say, okay. And he's like, what do you mean? And I'm like, yeah, like, let's do it. Like, I'll buy it. Like, how about this? Like, he's like, well, I'm not really done yet. And I was like, well, why don't I buy 60%? You guys keep running it. I'll leave you alone. And he was like, let me go talk to my wife. And he literally went home and he talked to his wife. And then I said, we were both flying out the same day. He was flying to New York and I was flying home. And so we met at the Auckland airport in the Air New Zealand lounge. And we hammered out a deal and I sent him a letter of intent. And I think like if we'd been a traditional private equity firm, that would be a very slow process. They spend a lot of time having a lot of conversations before they ever make an offer. I am just like, I will immediately make an offer with somebody. If I have a gut feeling about something, I will move it forward. And that includes a business idea. So let's say like I think of a business idea, I will make a logo, I will tell people, I will launch a website. Like I just move really quick.
I'm surprised by one part that I feel that it's missing.
Mm.
I always saw you as an excellent communicator. Like maybe it's a thing of me because I saw a lot of your adventures and the book and everything. So the poking holes in the business, the pace. There is another thing. Like everyone. Like you are really. I don't know if known is the
I
right
didn't
word.
know, that's new,
I
like,
never thought of that. Really?
no, like, I think we're like, we joke on our website, it says, an overnight success story 20 years in the making, right?
Always.
And it's like, I used to go to conferences. I remember I went to this tech conference and I sat next to this, I was in those circular tables and I sat next to this very famous venture capitalist from Silicon Valley. So I know who he is. I'm
Yeah.
kind of excited to talk to him. And he looks over at me and he goes, what's your business?
Ooh.
Or sorry, he goes, what's your startup? And I said, oh, I don't really have a startup. I've never raised money. I bootstrap my business and I've got this agency and then I have, my software business and I start listing off some of the other stuff.
Horrified.
And he just goes, oh, a lifestyle business. And then he just literally, like, we're at a circular table and he just turns away from me and he starts talking to the guy on my right or on his right. And I'm there sandwiched. My face is all beet red and there's two people on either side facing away from me. And I'm just like, fuck this. Like, I hate this feeling. And so
It's so weird.
I used to go to conferences and I was a nobody and I would have to build up my courage and go say hi to people or whatever it is. And I remember I was at the TED conference way back in 2009 or 2010 and I didn't deserve to be there. Like I somehow got in, but I didn't deserve to be there. And I met this guy named Derek Sivers, you know who he is? And he was the opposite. He'd sold his company for $20 million and I knew who he was. And I just walked up to him like an eager beaver and said, oh, Mr. Sivers, I'm a huge fan. And he was so sweet. He asked me all about myself. He said, me and my friends are going for lunch. Why don't you come with us?
Yeah, I agree, guy.
And so for me, I always did want to be known. I didn't want to have to, embarrass myself and have to walk up to people and do that. And it came really slowly. It wasn't until 3 or 4 years ago that I could go to a conference and actually have people walk up to me and know who I am. And I always try and be more like Derek Sivers, because like I remember how horrible it felt. So whenever I meet a young entrepreneur, I'm always just like super warm and I get to ask them about themselves. And I like being known because it's a shortcut.
Yeah,
You know,
it's so
you
convenient.
you read my book. Yeah, I don't have to tell you about myself. You know it all, and we can just talk. If we were having coffee, I could just ask you a million questions and learn about you. And I love that. So for me, um, I have gotten a lot of value out of doing podcasts and writing the book and being more public with stuff. And it has a lot of great benefits.
Yeah.
But it was a long time before it happened.
Yeah, it takes a little time. Derek as well, I think you read his blog and books and stuff because he's very good writer.
He's such a great writer. There's so many. I remember the moment that I realized how powerful books are.
Yeah.
Somebody said, I don't remember what the situation was, but they said, Ben Horowitz from Andreessen Horowitz is a jerk. And I said, no, he's not. What are you talking about? And they said, oh, do you know him? And I thought about it and I was like, wait, I don't know Ben Horowitz. I just read his book.
Yeah.
Right. And I was like, whoa, that's crazy. Like I have a relationship with Ben Horowitz and he doesn't know it, So that's the cool thing about books.
Yeah. Right. Speaking about the book, so is there a question from your experience in Never Enough, because you write it to process everything and such, that you wish someone have asked about that, but you never had the opportunity to answer?
You mean like about the process of writing the book?
Yeah, about the process, the content of it, something that you expected people be curious about. And you're like, well, nobody asked about that, really?
No, I don't know. I think writing the book, it started out as, I'll write a book. You share some business lessons.
It's a Sunday. Where should it?
And I was kind of like, I started writing out some of it and building an outline. And it was like, oh, here's my experience going through this or that or whatever. And as I started writing, I realized two things. One, the best books that I've read, the best business books, they show, they don't tell. So they use storytelling to teach lessons. The most boring business books are the ones that say, the best way to hire is this. And then at the end of the chapter, they say, here's my 6 bullet points on how to hire. And I spent a lot of time reading great business books and then also fiction. So I read a lot of fiction to try and figure out, how do you build a thriller? How do you build a business thriller effectively? And as I wrote the book, I ended up kind of almost, at the time I was 35. I was going through a midlife crisis. I got divorced in the middle of writing the book. And so it ended up being kind of a form of therapy to work through my own muddled thoughts. And it didn't start out as a book that was a memoir. It started out much more as a business book. But I love how it turned out. And I think, I've been really happy with the reception that I've gotten from it. And I've got to meet all these amazing people. And I think that's the best part of it, is like, I get to meet all these people who let me live in their head for 5 hours. And that's really cool for me.
There was the last serious question. We have now a very interesting segment, which is a quiz. Are you ready?
Sure.
All right. So, private equity or public equity?
I don't think there's a difference. Okay. I think equity is equity.
Okay. Buffett or Munger?
I think both. Like they're both amazing, but I'd say, like, I've said this a lot, but like Buffett is like blues and Munger is like jazz. So they're different. Buffett is very consistent. He says a lot of the same things, but what he says are very profound and very well explained. Munger is just so all over the map. He'll insult somebody and then he'll deliver an amazing quip, and he's amazing.
Okay. Digital services or digital products?
Digital products for sure.
Podcast or blog post?
I'm a big fan of both.
But if you had to pick one?
If I had to pick one, I'd prefer a podcast, I think.
Oh.
Yeah.
All right. Tim Hortons or Italian Espresso?
Italian espresso for sure.
Key Day or OK Computer?
Oh man, I love OK Computer. That's actually probably my most go-to album. If I was gonna, it would be that or oh my god, In Rainbows. Those are my 2 favorite Radiohead albums. So I would say OK Computer.
All right. Sam or Sean from My First Million?
Oh man, that's so hard. I don't think I can choose. I'll cut them in half. Yeah, cut the baby in half.
Launching a meme coin with Logan Paul or interviewing strangers on the street with Noah Kagan?
Noah Kagan for sure.
My First Million or Cosa Sposta?
Cosa Sposta for sure. No doubt. Sorry, Sam and Sean.
Thank you very much, Andrew. This has been a lot.
That was great, dude. That was awesome. That's really fun.
If you enjoyed this episode, well, let me know. Comments are open. Feel free to like the video, subscribe to the channel. We mostly post in Italian, let's be honest, but sometimes I will have more interesting guests also in English. Cosa Sposta is available also on podcast platforms, namely Spotify and Apple Podcasts. If you're listening to the podcast right now on a podcast platform, make sure to subscribe and put 5 stars on the podcast so you help me spread the podcast to as more people as I can. I think this is a great interview, so I'd be happy to help more entrepreneurs into their journey. As always, I am Giulio, the host of the podcast, and see each other in a couple of Sundays for the next episode of Cosa Sposta. Ciao!